Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking this hour. India's GDP growth slows to 6.3% in the second quarter. Growth in manufacturing sector contracts by 4.3%, but growth in services sector offsets some of the damage, even as experts say restaurants and hotels are still in pain. Sensex and Nifty hit yet another record high as bulls enter deep into uncharted waters. Sensex gains over 400 points, Nifty gains almost 150 points. CNBC-TV18 Newsbreak confirmed the Kirit Parikh panel bats for liberalization of gas sector by 2027, recommends a reduction in the price until then with annual escalation for gas from existing fields. Shares of gas distribution companies rise in trade. Government is hoping to bring fiscal deficit closer to 6% instead of the 6.4% budget target, thanks to strong revenue and better expenditure management. Sources say Finance Ministry reiterated the need to end the free food grain scheme, which was extended till December this year. Government puts subsidies for electric vehicles worth more than 500 crore rupees on hold after recent incidents of fire. Sources say government's audit shows violations of localization and quality norms. Some EV makers could be asked to return the subsidy already claimed. That's an exclusive. India, Vietnam, Philippines and Thailand are emerging as strong backups with those diversifying their supply chain, says John Pearson, the global CEO of logistics giant DHL, but he also cautions against overestimating the shift out of China. That's an exclusive. Global cosmetics company Body Shop is betting big on India Tier 2 and Tier 3 cities. Global CEO says India is the company's fourth largest market, and despite the pandemic, brick and mortar stores continue to drive more than 75% of sales. That's another exclusive. Violent protests flare up once again in parts of southern China, which are under lockdown. But demonstrations have eased after the death of China's former president Jiang Zemin, who guided China into the global market and the economy. Bilkis Bano moves the Supreme Court, challenging the release of the 11 men convicted of gang raping her and killing her family during the 2002 Gujarat riots. The convicts were freed by the Gujarat government on August 15 under a past remission policy, sparking nationwide outrage. Amazon Web Services is committed to investing in India despite the global economic uncertainty. The head of AWS in India breaks down the $4.4 billion that has been invested in India till date. The top story this evening, India's GDP grew at 6.3% in the second quarter. This as largely in line with the CNBC-TV18 poll, which had predicted a growth rate of 6.4%. However, it is slower than the pace of growth in the same quarter last year. Growth in the manufacturing sector contracted by 4.3%, denting the overall numbers. But the services sector managed to offset some of the damage. Lata Venkatesh is here with the details. Lata, what do you make of the numbers and what does it mean for the full year growth target of over 7%?
Well, the 6.3% is in line and therefore it will not be a disappointment. It will not be exhilaration either. What's positive about the numbers? Agriculture has done extremely well at 4.3%. The number on the street, the average expectation was 3.2%. So it's done much better. Now, there are worries that it could be a give back for the subsequent, that is the October, November, December quarter. The damage of the late rains, etc., can be negative. But for the moment, that is the surprise, positive element. Manufacturing has clearly been way more disappointing than what the street was expecting. The street was expecting a flat performance. It's come in at minus 4%. That's serious. Services have made up. But, the overall disappointment comes from the fact that the GVA, gross value added, has grown by only 5.6%. Most people were expecting a 5.9% growth. Now, GVA plus taxes minus subsidies gives you GDP. So it's probably good tax collection like GST, which has made for the good GDP number. But the underlying economic activity may not be as good as the GDP number is suggesting. Of course, these are provisional numbers. On the expenditure side, the consumption is very good, up 10% year on year, and so is capital formation, which gross fixed capital formation rising by 10.3% is very good. Government has been a poor consumer. Government has consumed 4% less than what it did in the same quarter last year. But all these could change with a lot of money going to state governments. Maybe in the second half, we could see the government emerging as a good consumer. The biggest drag on the expenditure front is that imports are far higher than exports. So what you call net exports is a big drag on the GDP from the expenditure side. That's another negative. But putting all the pluses and minuses together, coming in at 6.3, most people are betting that the full year number will be 7% as the Reserve Bank expected. And with the growth also coming in as RBI expected, chances are that the Reserve Bank will go with a smaller 35 basis point hike in December compared to the 50 basis hikes that it was giving in the previous policies.
Overall, real GDP growth in 22-23 is on track to be at the range of between 6.8 to 7%, and IMF maintains 6.8, RBI maintains 7%. And I think the more important thing is, if you look at the festival sales, if you look at the bank credit growth, if you look at the purchasing managers indices, whether it is services or manufacturing or the composite outlook, the economy has maintained its momentum, especially, I reiterate, in the face of very strong global headwinds and uncertainties.
GVA is what I was actually looking at. GDP comes out in the wash, and what really matters for the state of the economy is what's happening to the GVA. And the GVA at 5.6 to me is not a great surprise. What is a surprise to me is GDP at 6.3. RBI would be perfectly comfortable with these numbers, and the focus should be on what's happening to inflation. The inflation has started moderating, but you can't quite take the foot off the brake yet.
All right, let's get you more macro news now. The government is hoping to bring fiscal deficit closer to 6% instead of the 6.4% budget target, thanks to strong revenue and better expenditure management. Sources say Finance Ministry reiterated the need to end the free food grade scheme, which was extended till December this year. To the market action now. Sensex, Nifty and Nifty Bank hit yet another record high as bulls enter deep into uncharted waters. A last-hour recovery led by MSCI inflows helped the markets end at the day's high. Sensex gained over 400 points while the Nifty gained almost 150 points. FMCG, autos and metals led from the front while PSU banks underperformed. The Indian rupee rose in November, marking its first monthly gain this year. This ended the rupee's longest losing streak in nearly 4 decades. The dollar index coming off its peak and oil prices tumbling helped the rupee end November with some gains. For the month, the rupee strengthened 1.6% to 81.4 against the dollar. However, it underperformed its Asian peers. In the commodity market, oil prices gained as US crude inventories were seen falling. However, concerns that the OPEC Plus would leave policy unchanged in its upcoming meeting limited gains. NYMEX is around the $79 per barrel mark, while Brent is at the $84 per barrel mark. The government-appointed committee to review gas prices has submitted its report to the Oil Ministry. The panel led by Kirit Parikh has recommended liberalization of gas prices starting 2027. But until then, he has proposed a price band of $4 to $6.5 per MMBTU with an annual escalation in price. Kirit Parikh spoke exclusively to CNBC-TV18 soon after the report was presented to the government. Here are his comments.
What we have suggested is that there should be a floor of $4 per MMBTU. This is to cover the marginal cost of production of OIL and ONGC. And we have also put a ceiling price of $6.5 per MMBTU, which ceiling price will be gradually raised every year by about $0.5 per MMBTU.
When you speak about liberalization of gas prices, you speak about a 1st January 2027 timeline. Now, what?
That's for APM gas.
That's for APM. And January 2026 is for?
Other gas.
For other gas fields,
right.
like difficult gas fields.
On to a CNBC-TV18 exclusive now. After recent fires in electric vehicles, the Department of Heavy Industries has slowed down disbursements to EV manufacturers and even put subsidies on hold in some cases. This is in response to a high number of complaints regarding violation of localization criteria and quality norms. Government is also considering asking certain EV players to return the subsidy claimed. So we believe that the disbursement of subsidies has slowed down to all EV makers. Audits are being carried out whereby ARAI and ICAT, which are testing agencies of the government, they are visiting the factories of EV makers, studying their supply chain data, their localization criteria, and quality norms on the shop floor as well. Wherever there are discrepancies, the FAME subsidy is being put on hold. Even when there is a complaint, and there have been a large number of whistleblower complaints over the last few months, the government is putting the subsidy for that particular company on hold till the doubts are cleared. So till now, subsidies to the tune of 500 to 600 crores have been put on hold. And we're also learning that the government may ask some of the EV players to return the subsidy as well. The DHI, the Department of Heavy Industries, has made a proposal, but it is pending with the minister. At the same time, there is also a question of the sustainability of subsidies. Remember, the FAME outlay was 10,000 crores. Whether the FAME scheme will turn into a FAME 3 and there will be a continued support, incentive support for the EV ecosystem, that remains to be seen. Moving on. This is international news now. Violent protests flaring up once again in parts of southern China, which are under lockdown. But demonstrations have eased after the death of China's former president Jiang Zemin, the leader who guided China into the global market and the economy. Eunice Yoon reports from Beijing.
Well, the export hub Guangzhou has announced today that it's lifting most of its lockdowns, and this is after videos emerged of what appeared to be quite violent clashes between residents and the authorities. This mood of the protesters as well as the public will probably be affected by another major political development today, and that is the death of former President Jiang Zemin. State media today reported that Jiang, who oversaw the country in the 1990s and the early 2000s, died in Shanghai due to leukemia and organ failure. During his watch, China entered the WTO. Hong Kong was successfully handed over from the UK to China. And McDonald's, GM, as well as a lot of other multinational companies entered China, which was in a period of tremendous opening up and reform. Now, in light of the COVID protests that we've been seeing over the past several days, people have already been making comparisons with the Tiananmen Square protests in 1989. Those protests were sparked by memorials after the death of another very senior leader in Chinese politics, a man named Hu Yaobang, who was revered by Chinese reformers. So what investors at this point should be watching for is whether or not we see public gatherings and vigils for Jiang Zemin. Do they eventually lead and add fire to a protest movement, and also what the impact potentially could be to the power of President Xi Jinping? Jiang was part of a competing faction to President Xi.
All right, we'll keep an eye out for protests in China. A quick look now at some other headlines. Back home, debt-ridden Reliance Capital receives 8 binding bids under bankruptcy proceedings. 5 bidders, including Piramal Hinduja, Oaktree, Torrent Group, and others, want to acquire the entire company. 3 bidders are eyeing parts of the company. Analjit Singh could be looking to monetize his stake in Max Financial. Sources say Singh is expecting a valuation of 27,000 crore rupees. Max Financial says Analjit Singh remains engaged and invested in the company, and the report is untrue. The Tata Group is in talks with Taipei's Wistron Corporation to buy its manufacturing facility in Karnataka for up to 5,000 crore rupees. Wistron is one of Apple's top vendors in India and began making iPhones in the country in 2017. The company assembles iPhones at its plant in Karnataka. Remember, back in 2020, thousands of contract workers protested at this facility against unpaid salaries, which also took a violent turn. The big newsmaker this evening, John Pearson, the global CEO of logistics giant DHL, is upbeat about India and its growth prospects. Speaking exclusively to CNBC-TV18, Pearson said India, Vietnam, Philippines and Thailand are emerging as strong backups for those diversifying their supply chains out of China. However, he also cautioned against overestimating the shift out of China.
India, Vietnam, Philippines, Thailand, some of these countries are strong beneficiaries of a more flexible and backup-oriented supply chain setup, as opposed to just depending on China. So that is happening, and we can see our volume growth out of those markets as extremely strong. Whichever industry vertical you look at, and whichever size of customer, global, multinational, national, what we call field sales, telesales, or even micro. I've had all sorts of data put in front of me that shows the growth of all the channels, from small customers to large customers and global customers, and all the industries are really, really growing very strongly.
And you can catch the entire conversation with John Pearson, the global CEO of logistics giant DHL, at 9:30 p.m. right here on CNBC TV18. From one newsmaker to another, Body Shop CEO David Boynton is bullish on India and believes that Tier 2 and Tier 3 cities will catapult the company's growth in the country. Speaking exclusively to my colleague Ashmit Kumar, he said that despite post-pandemic digital push, offline stores continue to drive 75 to 80% sales.
The market's doing so well. It's our number four market in the world. We believe it can become number 2 behind the UK in the next 3 to 5 years. Now it's not about coming here to solve a crisis. It's coming here to get closer to the team and figure out how we can partner together to make the Indian market even more successful for the Body Shop. Broadly speaking, we imagine that we're going to land at somewhere around about, somewhere in the range of 75-25, maybe 80-20, that kind of split between physical stores and online. And it's important, you know, not to underplay. Whilst I'm a lover of retail, I'm also a realist and a pragmatist, right? Mm-hmm. We have a whole bunch of customers who enjoy shopping online.
And we're going to take a short break at this point, but when we return, we'll get you news from the aviation space. Don't go anywhere. Welcome back. In national headlines, Bilkis Bano moves the Supreme Court challenging the release of 11 men convicted of gang raping her and killing her family during the 2002 Gujarat riots. The convicts were freed by the Gujarat government on 15th August under a past remission policy, sparking nationwide outrage. DMK, the ruling party of Tamil Nadu, has filed an affidavit in the top court opposing the Citizenship Amendment Act. The affidavit says the exclusion of Muslims and Tamils of Indian origin who have fled from Sri Lanka goes against the secular fabric of India. India is set to take over the G20 presidency from Indonesia tomorrow. The two-day G20 summit is slated to be hosted in September next year. Government plans to hold over 200 meetings across 20 Indian cities over the one-year period. The big idea would be to promote brand India and its tourism potential to the world. Experts say food security, inflation, recession, climate, terrorism will be the key talking points.
G20, of course, being home to 80% of GDP globally, as well as 80% of greenhouse gas emissions. We need consensus in the G20 countries, first of all, on financing and technology for climate action. And climate action is both, of course, mitigation and, importantly, as India has strongly reinforced the message, on adaptation, on helping those communities, especially in lower and middle income countries who are suffering the most from the impacts of climate change.
All right, so India assumes the G20 presidency tomorrow, the 1st of December, and there will be a big outreach planned as well. Moving on, Tata Sons and Singapore Airlines have agreed to merge Air India and Vistara. Singapore Airlines will hold 25% stake in the combined entity in exchange for the current 49% stake it holds in Vistara, along with a 2,000 crore rupee investment. Madhiha Mujawar is standing by to explain the rationale for Singapore Airlines to sign this deal.
Well, Singapore Airlines has given up a bigger share in Vistara to get a smaller share in Air India. But this could be one of those cases where the less is more. And in Singapore Airlines' own words, there was no other alternative than to merge. Vistara was launched as a joint venture between the Tatas and Singapore Airlines in 2015. Ever since it took to the skies, the airline has struggled to make profits. Vistara's losses have mounted from 400 crores in FY16 to over 2,000 crores in FY22. The SIA Group has given a comprehensive justification on why it agreed to merge Vistara. It said Vistara has been a loss-making entity and will need a significantly higher market share to become cost-effective and profitable. Justifying the merger, it further said that remaining invested in Vistara is as risky as merging it with Air India. So it chose the option where there is possibility to grow. SIA went on to say that Vistara faces intense competition against larger incumbent airlines when it comes to securing air traffic rights and slots. It said there is no assurance that Vistara would be able to secure new and suitable air traffic rights or slots that are required for growth. SI also explained why staying invested in Vistara was not wise. It said Vistara's organic expansion would be met with multiple challenges and could potentially incur higher costs and more losses. Explaining how it stands to gain from the merger, SIA said it will get access to Air India's valuable and coveted aircraft slots, air traffic rights that are not currently available to Vistara. It continued saying that the proposed merger with Air India would enable SIA Group to immediately gain exposure in an entity that is 4 to 5 times larger in scale compared to Vistara. And given the higher cash burn in running an airline, SIA sees this merger as an opportunity to tap into a larger platform with stronger financial backing at minimal financial outlay. So what do experts make of this merger? According to the Center for Aviation, competitive dynamics are moving towards a two-pillar system around Air India Group and Indigo, with the two expected to control 75 to 80% of the domestic market share.
All right, thanks Madhiha Mujawar for getting us that big story. Moving on, Amazon Web Services or AWS, that's Amazon's cloud platform, has signaled its intent to go big on the investment front in India. CNBC-TV18's Jude Sanath caught up with AWS India's Puneet Chandok at the company's reInvent conference in Las Vegas to understand the rationale behind these investments and future plans.
To your point around Hyderabad, I'll take a step back and start with Mumbai. So we launched our Mumbai region in 2016. We've invested close to $3.7 billion there. And then we thrilled to launch Hyderabad last week and $4.4 billion of investment, 48,000 jobs annually to be created. And we've also estimated that by 2030, Hyderabad will add $7.6 billion to the Indian GDP. So really excited about the investments in India. It's a big part of our mission in India, which is to become a force to move the country forward. And it's just a big testament to what we're trying to build in India. To your question on the market, I genuinely believe today India is one of the largest open markets for technology companies to serve. So we're very excited about that. And that's the reason we're investing. We're not just investing in infrastructure, we're also investing in skills. We've trained 3 million people in India in the last 5 years, many more to do. But again, really building for the long term in a customer-obsessed way for India.
Right. So is it fair to assume that India would then figure in the top 5 markets for AWS globally?
We don't comment on rankings. All I can say is, as I said, India is one of the largest open markets for technology companies to serve. We're building for the next 2 to 3 decades, and we're truly building a business in India which is very customer obsessed.
You know, Puneet, what's also interesting is the fact that this investment comes at a time when we're witnessing, a long winter for companies in the tech space, startups included. Do you feel that these big commitments will have the wherewithal to actually survive the fact that many companies, mostly startups and tech companies admittedly, are actually in what is a very difficult phase for them in terms of funding, in terms of revenues? How will this work, with the fact that we're seeing a bit of a downturn in this space?
I think the first thing I'll say, Jude, is one, we're committed to India. We're committed for the long term, and that's the reason you're seeing investments, and we'll continue to invest in the country for startups, for digital businesses, for enterprises. To your point around economic uncertainty, yes, there is economic uncertainty across the world, but in that environment, customers have realized that they need to use technology and cloud in a more meaningful way. And we're working very deeply with our customers across startups, digital businesses, enterprises to help them optimize their spend onto the cloud so that they get more value out of it. At the same time, in the long term, given the penetration of cloud in India is low single digits, I see no reason why we will slow down. In fact, we will come out of this crisis in a much stronger way.
And with that, it's a wrap on this edition of India Business Hour. But before we go, some very sad news. Vikram Kirloskar, Vice Chairperson, Toyota Kirloskar Motor, former President of the CII, former President of the Society of Indian Automobile Manufacturers, one of the stalwarts of India's automotive industry, passed away at the age of 64. According to initial reports, he suffered a massive heart attack. Vikram Kirloskar was last seen at the new generation Toyota Innova High Cross unveiling event in Mumbai on the 25th of November.
Co-powered by Century Ply, आग से बचाए